very excited to share the next hour of time with you. We'll say it a couple of times, but if there's questions that come up, just in your mind throughout this, please feel free to pop them into the chat or the Q&A, and we'll do our best to address them on the fly. Because no doubt everybody here who's using ConnectWise, either now, it's such a massive system that there's going to be no doubt things that you're going to watch or take in for what we're talking about now that will resonate within your own MSPs. So let's get into it. In terms of today's presenters, okay, I feel very, very lucky to be the one sort of hosting this, but really for me, from a bit of a selfish standpoint, get to ask many, many, many questions from Brandi-Ann Moore and Kathy. I work with Brandi-Ann, or have done for the last sort of 3 or 4 months, but she comes with 10 plus years of experience of using ConnectWise within a small and then a medium and then a very large MSP. And Kathy with Pivotal Crew, sort of the premier ConnectWise consultants across North America and services the world. But maybe a quick intro for yourself, Brandi-Ann, and then Kathy.
Sure. Hi, everyone. Nice to meet you, or nice to see you. Thanks for joining our webinar today. As Adam said, before I came over to Cloud Olive, I had a cumulative 12 years of experience doing billing for an MSP. The last 8 months of that, I was using Cloud Olive to help me do my billing. So when it came time to move on from that, I was lucky enough to be able to join the team here at Cloud Olive. And if we haven't had the chance to meet yet, I'm the customer success manager, and my job is to make sure you're getting all of the value that you expect out of Cloud Olive, helping with questions, ConnectWise problems, anything. So nice to meet you all. Kathy?
Great. My name is Kathy Boulet. I am managing partner at Pivotal Crew. We are the premier ConnectWise consulting company, so that's great to hear. I have, unfortunately, have to admit, I have over 30 years of experience in IT services, management, process improvement, and the like, starting from very early on in my career. But now my company focuses on helping partners get the most use, excuse me, out of their ConnectWise PSA and fix any of the problems that they might be having in terms of process and execution and old ways of doing things, and trying to figure out how best to move forward.
Perfect. And just in terms of, there's a split here of clients of Cloud Olive and a portion, quite a large portion who we don't work with at the moment. So just in terms of intros, I'm one of the 2 co-founders of Cloud Olive, and sort of in between the amount of experience when it comes to MSPs in the 15-year mark, working at MSP, and then worked at ConnectWise's main competitor actually for a long time in Autotask, and just spotted this gnarly problem that MSPs were having come month-end billing, and there just was not a solution. And we got asked by hundreds of MSPs at my time at selling the other PSA in terms of, we've got all these different suppliers. How does everyone manage license fluctuations? We mess billing clients. Surely there must be a solution to it. And there just wasn't. So my co-founder and I set out to try and solve it. If you're not familiar with Cloud Olive, rather than me talk too much about it now, I really want this to be a webinar where you can ask questions around ConnectWise and set yourself up really, really well on that track. But scan the QR code. We're a bolt-on to ConnectWise, sit in front of that tool and can read all the different invoices, usage reports, and just guarantee accuracy in the PSA. Centaurus are a larger MSP based in the US that through acquisition, sort of a bit of a messy setup when it came to ConnectWise, and just gradually working with the team there, leveraging every possible corner and feature of Cloud Olive. They've really brought that tightly under control. And over to Pivotal in terms of the introduction, in case you're not aware of the team there. Kathy, I'll just go through this, please.
Yeah, so Pivotal Crew, we help with getting your PSA ConnectWise PSA, CPQ, all of various things that connect to it, operating more smoothly. So we're involved in helping partners set up the system if they're new to it. And they've done an implementation, but maybe still don't know kind of the features and all the things they can take advantage of. And we work with partners who have used it for a dozen or 15 years, and they have all kinds of decisions in previous decades that that have impacted what their system is set up as now, and it's not really set up for the way that they operate their business or in the most efficient way possible. So we help with all of those kinds of things: clean up, streamlining processes, making sure we're taking advantage of the automations that are available to us. And also, as our clients grow larger, financial controls around their processes become super important. So we help them through those transitions as well. We work with a lot of partners who are growing by acquisition, and so we help them with migration projects and just ongoing support, maintenance, and administration to help them keep their ConnectWise PSA and CPQ and various other tools under control.
Awesome. There's definitely a need for that. So there's 5 to 6 areas in today's webinar. And once again, we put the ask us anything towards the tail end, but please, if there's anything that comes to mind, pop it into the chat. Try and extract whatever you can out of this that's going to help yourselves in your own worlds after the call. When we were deciding, hey, what order should these go in? Almost uniformly, we were like, chart of accounts. It's something that's often overlooked, certainly in our experience, in what we see that or done after the fact in terms of just retroactively trying to squeeze that into ConnectWise so you can get the billing out in the first instance. But actually having a framework that you think about here is where we're going to start, and we'll gradually work through the other areas. Sort of ending out on managing Microsoft. I believe in a couple of months, actually, certainly in the US, that there's another round of price increases coming with Microsoft. So hang in there towards the end there. We'll spend 5 minutes in a pretty neat solution that you can consider for your own business there as well. But yeah, we want questions. The amount of ConnectWise experience, 30 plus years by the sounds of it, nearly, between you guys. Yeah, hopefully we'll get a couple of really cool outcomes for people here. So the building blocks, to me, I think the people who have the answer to this are ConnectWise consultants. That's what I've learned from seeing PSA setups that have been through a team such as Pivotal and those who have not. So Kathy, I think this is probably one that you can tackle yourself initially and just talk us through how you guys think about this area of ConnectWise.
Yeah, absolutely. So the chart of accounts, of course, is the financial structure that we're expecting information from ConnectWise to feed into, so we can understand at a macro level our financial picture, the financial results, et cetera. So it is really critical to understand that. And when we're working with partners, that's one of the first things, even if they have one very specific area they want to focus on, I really want to understand their chart of accounts before we dive in there, and understand if there's any, dig into it and see if there's anything that I would recommend changing in order to make the way that it reports for them more clear to understand. I'll show you an example in a second that is built off of something that I built working with partners who are part of peer groups and helps them both submit their results, but also understand the results better. But essentially, even if somebody I'm working with doesn't want to change their chart of accounts, understanding what that looks like and how the revenue needs to be split up will inform whether or not the structure works for them, whether or not the product catalog is set up correctly, whether the service module and project module are set up correctly from a structure point of view, not how you're using tickets and projects, but the structure of those things and how they can help us get the revenue to go to the right buckets when we create those invoices. So just as an example, and I won't go to a great level of detail here because we're just trying to give an overview, but this chart of accounts that I show you here, it's built off of the several principles that you'll see reflected throughout all of it. The first is, if you're an MSP, not every ConnectWise partner, of course, is, but if you're an MSP, what am I trying to do service first? And so this one is built based on that model of having service revenue be the most important thing. So therefore, it's at the top. In fact, the last partner I implemented it for 40100 was actually recurring. But either way, service revenue being most important, we have our service revenue split between technical and project. Technical being, reactive service, truly reactive, where, this month I might have a ton, next month I might have none. Project revenue being revenue that I actually go out and scope and attempt to sell more projects. Larger partners may be more easily able to split their cost of goods sold side for the services into the buckets that I have here, which is basically the principle here is matching. If I have a 40100, which is technical service, I want to get as much as my costs split out that way as well. So I can see one-to-one, am I making money in that area of my business? So the whole chart of accounts is built based on that structure. You'll see down in project revenue, same idea. We've got our project service salaries. Smaller companies may use percentages to decide how much goes in which buckets. Larger companies may have distinct teams, so it may be easier for them to do that. And then recurring services, the same idea. Down here, we have our managed services tools revenue, which is something I'll go through a little bit later on the recommended way of setting up your agreements. And of course, there's a managed services tools costs as well on this side. And then we get into product revenue. If you sell products, some companies I work with don't, but if you sell transactional products, that's where this would be. And then your recurring products and things like that Cloud Olive would sync to would be down here in the product section. So the idea being that my service revenue is all in one section that I can see a whole total together, and my product revenue is in a section that I can see from a total perspective and then individually with recurring and one time. And the idea here is that it really helps a partner identify value by separating out the transactional versus the recurring, which is a common problem that I see when I start working with partners is, just we threw in an account for this and it's mixed up with an account for recurring. And then I added in this other thing and it's way down here under the service revenue, one-time service revenue. So it just gets everything organized into sections that are easy to see. Here's how much income I had and here's how much cost. And then we break down, of course, the expenses as well. In this case, this is built for peer sharing with peer groups. So it's split into the categories that in this case, the partner I was working with was submitting for SLI. And so it splits everything in the way not only the way they want to see it, but also the way they are required to submit it for those purposes. If anyone has questions specific to this stuff, I'm happy to go into more detail, but I didn't want to spend a whole session just talking about the chart of accounts.
No, this is great. And you mentioned that you started talking there that sometimes people don't want to change their chart of accounts. How often does that happen when you discuss this granularity and clarity that may come from it?
So it kind of falls into a couple of camps. One is they've worked with another financial related consultant specifically before and built their chart of accounts that way. Typically, then the only recommendations I'm making are if things are a little difficult to map to based on the way we've got ConnectWise set up. That may be the only recommendations that I have to make. And then larger partners that have brought in, tons of different companies and they've already, done that negotiation of how are we going to report our financials so we can all report the same way. That's a little more difficult to change. So unless somebody sees something that's going to add some value to what they're currently doing, they've probably already worked out those issues. So again, the most important thing is your structure set up? And the critical part of this is going to be in your service revenue, the transactional service revenue. That is the most difficult part of ConnectWise to map. And I will have some partners that will need to have VoIP service revenue and security service revenue as separate line items. That will inform the departments that we need in the structure of ConnectWise. And it doesn't necessarily align to whether they're a large company. It just means if they have very specific, if they came from a world where they did mostly VoIP and they've evolved into an MSP, often those companies have a big focus on their VoIP and or security revenue. And so we need to split those out for that purpose. So those might be other areas that are in here, but that's basically where that comes from.
And how often would you recommend reviewing these for your partners and seeing if business has evolved, it's time to rethink what's being
Mhm.
billed?
So typically, when I'm talking to partners, I've got partners that I've worked with for many years. We have set up their system. We've gone through their chart of accounts, and then they come and they start talking to me about, oh, I've got this new offering, and I really need to see that split out. So typically, I don't need to completely readjust this entire thing every few years for any partners. What I might need to do is consider your business has changed, and how do we need to reflect that in the chart of accounts so that I can take that into consideration with my recommendations for what we need to do in the PSA?
Yeah, because one of the things we'll talk about in a few slides' time is around bundling of services,
Mhm.
the do's, the don'ts, the right way to do it, and that as MSPs are transitioning to that, they're going to have lots of reporting in lots of different camps at that point in time as well.
For
Is there
sure.
anything worthwhile sharing in this part that we can sort of lean back on in 10, 15 minutes time as well?
Yeah, I think, I did point out the managed services revenue is split managed services and managed services tools. A lot of partners do not have their managed services tools split out from a revenue perspective, just the cost. So that is something, and I'll show you kind of a way of splitting that out and how to accomplish understanding actual costs while still having an invoice that makes sense to your client.
Yep.
So that is definitely part of it. And then down in our recurring product revenue, this area here, there's lots of opinions that I hear out there in terms of do I need, if this partner, and the actual buckets we have under here are not important to me. If I'm talking to a partner and they care, Microsoft usually has its own bucket. So that one usually does. Some partners, they're like, backup is included in my managed services. So that's a managed services tool. So security, that's a big area that I've got some recurring products that I want to call out on my P&L. You might have VoIP as a separate thing. So the actual buckets are less important to me here, to me personally here. I need a bucket for everything else if whatever your choices are. So that's really where it becomes important to understand in your way that you're managing your business. Does this look like a different agreement to you than this and this? And that really can inform how many agreements we end up with for one particular client. If you had a client that bought everything from you, managed services, recurring products, all of that kind of stuff, what would their agreement structure look like? So the way that you choose to sync products in can have an impact on that, and then also the buckets you have in your P&L can also give me a clue as to what it is you're going to expect to see inside the PSA.
Cool. And perfect
Mhm.
segue here. I will share this back just in terms of the
Mhm.
next stage in terms of agreement best practices. I suppose, Brandi-Ann, you've seen both sides of this. You have to rebuild ConnectWises. You've had to help Cloud Olive partners sort of rebuild some of these things as well. What
I
comes to mind
have.
when you see this type of side? What do you hope people are doing?
What I hope people will start doing, which I know they're not doing today, necessarily. Can you hear me okay? I'm on
Yeah, loud and
AirPods.
clear. Loud and clear,
Okay.
yeah.
Um, just can't hear myself. So the absolute most important thing you can do is be consistent. I'm seeing more and more people where, well, for this client, our managed services is on this agreement, but for this client, it's on this agreement. And how can you possibly keep straight everything that you're doing in your own business if you're not being consistent? So my biggest suggestions are be ruthlessly consistent. If you have a Microsoft agreement, all of your Microsoft goes on that agreement. Don't get lazy and say, I'm just going to pair it to this one for this time. Name your agreements consistently, name them clearly, and don't make more than you need, which I know that Kathy's about to get into that, but be very, very cognizant of how many you have made and just be ruthless in the way that you set them up. It is worth spending extra time in the beginning to save yourself a lot of headache down the line.
Yeah, and I totally agree with that. The consistency across a number of conventions, product IDs, to me, are the number one most important decision you can make in your entire setup of ConnectWise. I don't know if you've got a similar view or a different view to that, Kathy or Brandi, but to me, the product IDs are crucial in thinking about getting that consistent. And
Yes.
the agreement structure as well. I know there's some clever things that you can do around child agreements and those types of things. Would be interested to hear your views on that because I know this you have far more experience than I do in this. Where it works well, maybe where it does not work well. Kathy, maybe
Sure.
your experience on that.
Yeah.
Well, let me
So,
give my opinion and
oh,
then,
okay, go for it.
sorry, we
Go
can
for
practice
it.
this part. And then
Okay.
Kathy could tell me why the way I've been setting things up is wrong.
No, of course
So
not.
one thing that I did was I set up parent agreements for all of my companies that didn't have an expiration date. So when you had an individual contract that didn't expire at the same time as the rest of them, because you can only have one, you can't have the parent expire before the child, right? So I would have the parent, which had no expiration date, and then I could bundle all of my child's children with their individual expiration dates underneath. That was all I was going to say. Sorry, Kathy.
No, 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 no. All good. Yeah, the consistency I think is super important. It's the most important thing for any process we're talking about in any, anything you're doing to run your business. Consistency is key. It helps people understand what they need to do and they're part of the process. And it helps clients understand things and it helps you keep track of things and understand where things went wrong. So consistency, absolutely. I'm when it comes to agreement structure, here are my general guidelines that I start with partners is one agreement per customer that covers time. I'm not a fan of having, oh, but they have infrastructure and then they have desktop and then they have one agreement that covers time. If we add a service, it goes on the same agreement that covers time for the service revenue. So all of your service revenue on that agreement. The only exception to that really would be if you have a block agreement, if a client also has a block agreement for project time, like they buy up front, they buy some project time and they get a discount, that kind of thing. Other than that, one agreement that covers time. Every customer that has managed services would have a managed tools agreement. I alluded to this when I was talking about the chart of accounts. So your revenue, so we need to split your managed services revenue for tools out of there and then put it on that managed tools agreement. And those two paired together, parent and child, give you your managed services total for the client. And then that would also, of course, have all your costs. So the parent agreement is getting all of your time cost going against it, and your tools agreement has all the tools revenue and all the tools cost. And boom, I can see if I'm making money in both of those agreements on the agreement profitability report. So that's the first thing, one agreement that covers time. I'm not a big fan, I don't know if that's what you were referring to. I'm not a big fan of when it comes to a master agreement of having one that doesn't have revenue on it. So if the master agreement is only there for the purpose of gathering a bunch of things together, I'm not a fan of that. I would prefer, I don't want to manage agreements that don't have any revenue on them. Like, why am I doing this, right?
Fair
So
enough.
to me, if it doesn't have revenue, I'm looking to figure out a way to stop doing that process. Expiration dates are something that unless a product literally stops working after the expiration date, not a fan of putting expiration dates in either. I prefer to manage renewals on configurations attached to the agreement. That's another way of doing that. So one agreement that covers time, child agreement for the managed tools. From there, there's some choices to make, right? I've worked with partners that have an agreement for Microsoft, an agreement for backup, an agreement for, now there's no time that goes on any of these agreements. It's just for billing purposes. So most of the time, most partners I work with want their Microsoft separate because there's so much banking on it, because there's so many licenses, because it's so confusing, because it's so all of the problems that your solution strives to help solve. Most partners want it separate for that reason, so we can kind of contain the problem in one place. Everything else from there, it can be one agreement, right? All my recurring products that I sell outside of my managed services, but they're recurring products like backup, if that's not part of my managed. I don't know, I'm trying to think of products off the top of my head here. But any of those things that you don't package with your managed services and you separate out, we could have one recurring, I refer to as just a recurring products agreement. We could have one. It could have your Microsoft on it. It could have all of your other products. Or you could split that into two and have Microsoft and everything else on a different agreement. Kind of a personal preference there. My recommendation is always as few as possible
Yeah.
to do the thing you need to do and report the way you need to report.
And what about if they, what about if the MSP is buying and selling quite a lot of the annual Microsoft stuff? Would they live on a separate agreement to more easily sort of monitor that?
I would, so yeah, if there's like, if they can't be co-termed, so you're talking about if like I add another license later and it has a different expiration date and all that stuff. If we can't co-term things, then that's where expiration dates on the line items might be useful there instead of using configurations, because really you could end up with one large customer, one large client. You could have, you know, a ton of configurations managing your expirations. If you can co-term them, obviously that would be ideal. But if you can't, then yeah, you would have to have separate products on there. I don't think it needs a separate agreement unless there's some reason why those can't be. Like, again, I don't want the agreement to expire. I want the individual products to expire if they do and when they do, basically.
We've just had a question from Robert here. How do you get around the problem with no ability to attach configuration items to additions on larger agreements? You can only attach the CI to the agreement.
So I think yeah, you can't. So you can't tie it to the product is I think what we're talking about here. And so the configuration is attached to the agreement. The configuration should have an expiration date on it that matches what the addition would have. And then you use your renewal workflow to manage that and to call out the fact that this is about to expire. I don't think it's necessary to attach it to the product. And I'm happy to hear that I'm incorrect in that. I'm happy to hear that there's a problem there and we need to problem solve that. This is how we come up with our best practices anyway, right? But I don't think we necessarily need to, based on currently known information. But I would say, you know, if you're using if you have a large agreement that lots of things expire at different times, there's an argument to be made where using the expiration date on the product on the agreement is fine. And this, as long as it's a sub agreement, I don't want it to be your managed agreement. I want it to be your sub agreement. So that would be fine. And you can manage it that way. My concern with doing that is if it does expire, if somebody doesn't click the thing and do the thing, it's gone and you're not billing anyone and you might be getting billed for it. So that's why I have a concern about that. That's why I prefer to use configurations. But ultimately, you know, if there's a necessity to tie it to the product, you create that configuration from the product, just name it the same as the product would be my workaround for that or way of tying it together.
Sounds good. Hopefully that answers your question, Robert. Please keep them coming. Well, I'm just mindful of time. We'll kick it on now and talk through something that's near and dear to everybody's heart whenever you go to any MSP conference, is around how should I bundle? How should this work? It's not working. I can't report. This is a daily conversation that we certainly have with ConnectWise partners who are thinking about it, or have made the leap into doing it, and some who've tried it and now gone, no, we're going to break everything back apart. We couldn't make it work. We've seen that entire spectrum of the journey that many MSPs have been on. I know that we're going to share some really like a fairly unique way, or probably the best way that you can consider it within ConnectWise. But from both of yours view, maybe Brandi-Ann, what has this been? You're obviously seen it now within Cloud Olive, but your experience in working at an MSP trying to go that path, if they were?
Yeah, so we had a top line item where we would sell like managed user package, and then I had listed out below all of the $0 line items so that I could track very specifically the number of DNS filter or SentinelOne we had per client. So we did do bundling, but with every single line item broken out underneath, I'm a little neurotic about that.
Yeah, okay. And Kathy?
Yeah. So I'm definitely an advocate for splitting out your managed tools. I saw that on the chart of accounts that I showed. we need to split out some revenue for that as well, which is not something that a lot of partners are doing as of yet, that I start to work with anyway. And so I think it's important to break down how you create, one, do it consistently, right? So if I quote this way to one client, I'm quoting it the same way to another. So one partner that I actually do all their agreements for them and create them, the product revenue does not change. So if they come to me and say, oh, we need to edit this because my service revenue is too low, it's like, that's what your products are. Like, we're not changing that, right? So you need to consider that when you come up with what your service price is. So the essential way it breaks down is that I need to split out, and I'm going on the assumption that a partner is managing the individual costs of the products as a separate item from the user cost. So we're per user here. I've got 50 users. I might have 58 RMMs, and I need to be able to account for the variance in cost, but I don't want my, especially with an invoice grouping, I don't want my my price to just magically change to the customer without me getting involved in it. And so yeah, someone pointed out it's not bundling technically, it's invoice grouping. So when I put all those things together, I split out the per user managed tools revenue as a separate line item, and then I have my cost, and I've got an example, I've got an image of this. I have my cost split out on the individual products that can be synced over. So in this example right here, just to explain it, my managed services is one agreement, my managed tools is your second agreement. The products on this agreement are, there's my invoice grouping, which is the top, managed IT support. We all know this is unfortunately how it looks on the invoice, is no quantity, no price per quantity, and just the total. So that's what it would look like standard on the invoice. I've got a little trick around the invoice that I'll share with you in a minute. And then managed services, that is a line these are the hidden products. So all the gray are hidden products. The managed services is on the parent agreement. So it's on that managed services agreement. This is the entirety of my services revenue for this particular structure of agreement. Underneath that, sorry, I thought someone was going to ask me a question. The managed tools agreement, which is a sub agreement, has a product on there called managed tools. That has the entirety of my revenue for the tools. So whatever the costs are on my products that I include as part of my managed services times whatever markup I want to get. In this case, I just doubled it. 50 times that comes out of my total managed services line, which in this example is 135 per user. 50 of that goes towards managed tools revenue. And then all of the costs are actual costs that are coming from syncing my RMM over, and it says I have 58 of those. AV licenses, wherever that can sync from. My cybersecurity training, I don't know if that can sync from anywhere, so maybe that's just per user. Endpoint should be higher. Sorry, I didn't change that quantity for this example, but my endpoint protection would equate to the number of endpoints that I have. So down here, you would have your actual costs. So for this agreement, if I pull an agreement gross profit report, I'm going to see actual revenue, actual costs related to the same things. For this one, I'm going to see actual service revenue and my actual costs from time that's put against that agreement in a given month. So this really allows you to break it down inside ConnectWise in a way that helps you split things the way expected today. Also take out some of that managed services revenue. So splitting your tools out by itself is not good enough. We have to have some revenue on this agreement. Otherwise, you're overstating your profitability on your managed services line. Because if you just look at managed services revenue, it's going to say 135 per user, no revenue down here. It's just my costs, right? That doesn't give me the right picture of what my profitability is based on the actual time that I'm spending. So this allows us to split that out. And this allows us to make it consistent, which is necessary to make invoice grouping look correct on the invoice, where the client is getting charged for that. And if you do the model where, 50 are included, but these additional 8 I'm going to bill, we set that up with partners so they have 2 different products. One has a less included, and then the other one is the one that, that one is the one that syncs to a tool. So a little more complex to manage, but not super difficult. But this way here, you're managing your costs. It's an account management function to look at that and see if your costs have gone outside of the the framework that you set for your managed tools, and then go back and negotiate with the client on that one. So I don't know if you had any questions on that,
Yeah,
Adam, but
I got plenty here. I got plenty. Something's just, I know we spoke about this a few days ago, but something's just dropped for me here in terms of
sure.
the split between the two of them. Wh- ha- on the how would you determine the 84.70 versus the $50.30? What formulas, or what, however you, or how would someone arrive at those and have it as accurate
Right.
as possible?
Yeah. So every partner I've ever worked with has a spreadsheet they use to come up with their price per user for a new opportunity for managed services. So whatever calculation they put on their individual products is what we use here. So here I just doubled it. If this partner had a 2 times multiplier on their products, that maybe their price per user is 175 instead of 135. So it whatever they tell me is their price markup on the products. What are you trying to get on the products? What's your percentage? That's what we put and calculate the revenue on it. So it's just like any other product. You need to determine what your markup
Yep.
is on it.
Yeah, cool. And because
And oh,
the
sorry, one
please
other
go.
comment. Sorry, before you move on. If I had another client and I'm only charging them 125, their per user, their product revenue does not change, which means I'm making less service revenue for that client.
Yep.
So it's always the same. Every client is paying the same revenue for the products.
So you can see consistency.
So you can see
And
consistently compare it. Yep.
and this solves very closely the problem of, like, if you break these apart, you're going to lose the visibility on my RMM specific margin, right? Because there's zero revenue now associated with it. However, you would
Sure.
have, if you're thinking about the companies that are like, we want to go this path, but we still want to know the profitability on these things. And going bundling solves invoicing simplicity for the customer. Ideally, you just need to make sure you reconcile your count of 50 from wherever you choose to have your source of truth. All the other bits and pieces in between, that's a you problem that they don't line up to 58. Like that 18, as he said, it should be higher. We've seen it not be that high when
Sure, of
when
course.
we see all these things.
Yeah.
Right. And it just tells a story that the MSP needs to go, whoops, what's going on? Has my RMM fallen over, or my endpoint protection fallen over, or whatever it is?
Yeah.
Or have we not deployed it? That's an MSP problem, not an end client problem.
Yep.
But this would at least give you, oh, we are making 50% margin or whatever it is across tools in general from a bundling perspective. Awesome. Or 30% or whatever it is. And you can still then see it for all the peripherals that haven't made the transition into bundling yet. I think the key difference for me is a big lesson here. And I've been looking at this problem from many different angles for many years and many hundreds of implementations. Is actually the managed services and the managed tools contracts being broken apart of the agreements. That's sort of the key maturity step in this to give you what you need. With having them all in one, you're right, you're going to lose a lot of the granularity and visibility around this. And I think that's probably what people are missing from
Sure.
what I've seen anyway.
Right. Well, and it's also difficult to understand how much you're overstating the profitability on your managed services if you're not taking into consideration the actual costs of the products that you're including. However, it is difficult with invoice grouping to set the price here, because obviously if I have 58 and I set the price here, I need this to be billable. I need these lines to be billable, because a lot of reporting solutions will report on profitability based on the products that are on the products tab of the invoice. So with invoice grouping, the client doesn't see them, the PDF doesn't show it, but they're on the products tab if you see them there. So that's why we need this to be billable. So therefore, it can't be the actual price here, price per user. And I apologize, I do have a dog who is getting very excited and barking in the background. So if you hear that, okay, good. Yeah, so that's why we need that split out. But if I want to control what I'm presenting to the customer and make it consistent and it works, and if I change it from 50 to 51, it calculates that at 135 a user, adds 135 to that total. This is the best way to accomplish that I've been able to come up with. Yeah. And really, if you think about it, what we're really saying in this box and I guess you're sharing your screen, so I can't actually, but in the managed tools box, all of those things, what we're really saying is we're looking at the total profitability of that, including actual quantities of actual things that we're actually including for this client. That gives me all the information I need to break it down further than that. I need to, if that number, if that profitability number doesn't meet my target anymore, and it doesn't meet it consistently for several months, then I know that I've got a problem in there I need to dig into. I don't need to look at a glance and see that I've got 62 or 85 of the RMMs. I don't need to know that particular line item to be able to come up with that. I need my profitability to look off, and then I need to dig into it.
And just final point, right? The 50 and the 50, if they move to 52 next month because they've got 52 business premiums or whatever your driver is for that, you would just come in there and up the 52 on the tools as well. Your 130 price point per user rolls up again into what the customer eventually sees.
Yep.
Yeah.
I was just going to answer a question that came in the chat. Should you
Yeah,
adjust
there's
your
a couple
tooling
of
costs? Okay. Yeah. Do you want to go? Sorry, you can go ahead and.
Yeah, so back up to Ashley first. We include backup within our managed services agreements for fully managed clients while also selling backup a la carte to co-managed clients. When those costs are invoiced as a single bundled vendor bill, what is the best practice for allocating COGS across managed services and recurring product buckets?
When you say that they're coming from a vendor on a single bundled vendor bill, the bill is bundled. My expectation, or what I've seen on other for other partners, is that it does show which clients it's for. So hopefully it does. If it does, when you're entering, there's no other way to get the bill in there other than if you can import it into your accounting package, obviously. So once that gets in there, somebody needs to assign it to the right bucket based on which client it falls under. Yeah.
So enter the bill into two separate chart of accounts as you're putting it into your accounting package.
Yeah, I mean, I think some people will go in and they'll put their bill with a total, and it doesn't say, like, even though the bill shows blah, 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 individual lines, they don't necessarily enter it that way. In this scenario where you actually have clients that you're selling the same thing to, but in a different way, I think it's would make sense. I would recommend that you actually do it line item by line item. And then on those individual line items, you can say which one it goes to. So you're not actually putting it in different buckets. You're just setting, oh, this customer's managed, so it goes under there. And so it makes it a little more difficult for your accounting, your bookkeeping person. On that side, yeah.
And another one, if there's $1,000 worth of cost and somehow you've got a way to dictate or drive, hey, 60% goes to this customer because of this number of this scale or this amount of something.
Sure.
We could also add that logic into Cloud Olive so it breaks it apart based on 60. Like if you've got a way
that would be even better. That would be even better.
if you know we do this and there's a way that you could formularize that for yourself,
you can identify it,
identify it, be consistent.
Yeah.
Then we could just bake that into Cloud Olive as well, and it will do the heavy lift for you. And then that's one layer up, I suppose. Hopefully solves it rather than having to do it just in the accounting. At least it would hit ConnectWise as well.
Yeah, that would be great. Yeah, if you could automate that, that would be awesome. Like the main different or issue that we have is how do I know from looking at the bill which one is which, right? Do I only know it because it's in my mind? Like how do I, so that's because I know this client is managed, is that the only way I know that? So it would definitely, be important to understand how that might show on the invoice for sure.
Yeah, cool. And question from John around hitting a volume amount. You've now got a cheaper rate from the vendor you're buying it from. You hit a threshold, a new tier. I think the answer here is yes. Cost goes from 150 down to 125. Should we be baking that in across the board to everyone? I would imagine that's a big yes.
It would be like, so RMM is an example. RMM typically will have thresholds that you hit. When you hit a threshold, that needs to be part of the process to, you need to change how you're quoting because now I've got, a little more margin in there. You need to change all your existing agreements because now you're paying less per unit. So yes, I think you do. And you can do that on mass in ConnectWise as well. So.
a new threshold, Kathy, or a quarter end special from one of the big vendors. One of those,
Sure.
right?
Yeah.
One of those.
That would be
And
great.
also to that point, if there's products on a shelf as well, you buy 1,000 because it's a sweetheart deal at the end of a quarter, but you're only deploying 800. Something that we really try to drive our partners to do is, hey, we know your commit count. We can see what's been deployed. There's 200 floating. Ideally, bake them back to yourself so you can get true cost profitability across everything. And
Right.
your own internal tooling and
Yeah.
waste, if you will, all should live on your own
Right.
agreement in your home account.
For sure. And in the chart of accounts, you could easily, whatever you're not deploying, this is a above the fold or under the fold question from a chart of accounts point of view, because above the fold is the ones we've deployed are cost of goods sold. The ones that are left over that we're not using yet, I mean, theoretically, you could call that assets, I suppose, but that's more of a CPA question than a than a Kathy Boulet question. But so at the very least, putting those to expense would make sense, because they're an expense for you right now until you deploy those out to your clients.
Yeah,
Because you have no
definitely.
revenue for them, so they're not cost of goods sold yet. Yeah.
Yep. And reconcile it back to yourself as if it's any other client and you want that to get to zero if it's shelf life, for sure.
Yeah, for sure. For sure.
So let me share this back up and we'll go into the next part of it. So avoiding common setup mistakes. I'd say this is like naturally agreements across the board. I'd like to spend a couple of minutes just around the naming conventions. We're in a very, very fortunate position to see hundreds of ConnectWise setups, and generally when we sync the data from the PSA into Cloud Olive and we got a single view to see everything, instantly we have a really clear indication, a general indication, let's call it, of their month-end billing must be very hard, or they've actually likely got things under control. And the main driver of that decision and just eyeballing it is how they've defined their product IDs. If they've simply taken the SKUs from the distributor, which it looked like just a 12-digit passcode or 15-digit passcode or something, or even created their own numerical ones that have no like logic to someone who I'm just fresh coming in and seeing these things. Generally, when you bring on new staff and all the rest of it as you scale, it's just a headache. It's a real challenge. I actually built a while ago just a naming convention formula, and this has evolved ever so slightly, but and we've actually got now a spreadsheet that you punch in the vendor side and then it actually does all this for you and delivers you a recommended name, either short form down here. Like this is just Exchange Online Plan 2. Really importantly, the challenge with just taking the vendor SKU, which we've got this up here, is that's the Pax8 Business Premium. That's the Ingram Business Premium. Okay. Annual, monthly, monthly is all the same code, identical. Okay. So in order to then, if you do have more than one of those conventions, or billing or commit frequencies, which majority of people do, you have to customize it yourself in your PSA regardless. So all of a sudden it's fallen away from being able to do an easy lookup. So with that in mind, really consider, this is our perspective anyway. If you've got another one, Kathy or Brandi, I'd love to hear it. This to me, if there's one thing I've learned in building Cloud Olive and working within the PSA land for 15 odd years, is this thing and this decision has ripple effects, really positive or really negative and hard in your business. And I think having a construct like this means if you buy an MSP in the future or you change from a distributor over to another, the naming convention gives you a chance, which is all written in this blog actually, around tagging things so you can gradually remove them, simplifying down everything. Either of you guys have any of your own thoughts around common mistakes here or service naming conventions at all?
Just that I agree with you. You've got to make it distinct. What is your annual? What is your monthly? What is your annual monthly? It's absolutely worth the time to get it set up correctly the first time.
For sure. Yeah, I agree with that.
So maybe me being this this focused on it, everybody's got the same lens on it. And especially with Microsoft, right? We see it where the risk of having like you're buying monthly and buying monthly annual, right? And they should be broken apart. The concern that we've seen many times over is you can even think that you're making the right money because it's linked to a service. And this can even happen with distributor APIs as well. But if you're buying a monthly and selling it as an annual, you're not making any money. But it's a really difficult thing to see as well. And vendor APIs, distributor APIs in particular, because they've just got one code, our experience, they can get really confused and auto link to the wrong thing quite easily as well if it's not like extremely clearly defined. Um, so just be super careful, especially when it comes to Microsoft. But every name should be simple. Can someone come into our business tomorrow and not have to ask infinite questions? Or all of our internal documentation is trying to explain all the complexity that we've got. The naming convention is almost like the key pivot point on the agreement, and it's changing all the time. Just think about that. Really, really, really think about that. If you want to, we can maybe flick that blog in here as well that you can read in your own time if that's of interest to you.
That's a good idea. Got a question in the chat that I will not read the entirety out loud. But the question is around if the VoIP provider needs to bill different rates depending on the country, does the MSP need to create an addition for every single country code to manage variable pricing?
I don't know if you've got a point to that. We've got something that I will suggest, and I actually show something. We're going to do it around Azure because it's Microsoft in a sec, but I can actually maybe talk pretty closely to something and just lean on that as well. But Kathy, have you got any specifics that you want to share on that?
My assumption, if I heard that, so I don't have anything specific. A lot of my partners who are doing VoIP are using Datagate to sync things. So it brings in taxes and all those kinds of things. So I don't experience this issue where I have to solve it because it's been solved or it will be solved. So so that particular issue is not one that I come across. If somebody brought me this, I would think we would need to have it on a separate product so you can identify which one is which and make sure you're billing them the correct product. But I'll let somebody who sees it more often address that for sure.
And was this specific?
And Nikolai, we can definitely take this offline and dig more deeply into this question and your specific situation if you want to email us.
Yeah, I'll share something that I think simplifies that whole piece of the puzzle down for anything consumption based, but we'll go through into Microsoft now, which generally accounts for 60 to 80% of all of the recurring costs for an MSP, hence why they are a near $4 trillion valued company these days. With Microsoft, if you are around the 16% margin, just to sort of bang home the importance of getting it right, if you miss 1 month of billing, you've wasted 6 months of your margin on that service. All right, so miss just 2 months. Zero margin has been made across the board for that for the entire year. And things are moving and changing, and they're certainly not making it easy for us. And I believe there's price increases coming very, very soon as well, again. And then you got all the different timings and commits and 7-day grace periods and all the rest of it. And then defining, if you do user-based billing, generally it's Microsoft a lot of the time. How do you define that? I wouldn't mind jumping in. I can actually show a couple of things that just sort of hit home and try to solve a number of these pressing pain points. But Kathy or Brandi-Ann, is there anything you want to share in your own experience in Microsoft as well before we do that?
You're going to cover anything I would have to say?
No worries.
I'll let the expert speak.
I wouldn't go that far.
Absolutely.
I wouldn't go that far. So just very quickly, couple of minutes here around managing the complexities within Microsoft. So one side of this here is I want to be able to quickly at a glance see where and what the impact of, like, naturally, if we want to fix my discrepancies with counts, great. But what about if we wanted to go, let me see, we've got a price increase coming here. My sell price is now this. So this is what's currently in ConnectWise for my Power BI monthly annual here. It's going from that, and my new sell price should be that. Okay. So one of the things we found or needed, and this is very, very, very new, right? But one of the things that we really wanted to try and solve for our partners was how can you just calibrate the cost price that's increasing per month, or like every 6 to 9 months with Microsoft. But really importantly, being able to see the relative impact on the line item for the decision you're about to make. And then you can go, do you know what? This is fine. I just want to push the cost and sell in. That's calibrating to the new price increase that's coming on a line by line item basis. Or you might go, do you know what? This is going backwards. Let me just, I'll come back to that in a second, right? So get that ready and then just push those changes into ConnectWise. Everything's calibrated now to what you're getting billed on the new monthly bills from your distributor, whoever that distributor might be. The question from Nikolai, although it's around Azure, right? Azure is, we see Azure getting sold at between 0 and 5% margin. We also see it at close to 40% margin as well. Same everything, right? There isn't a right or wrong way to do things, but coming back to a common thread and theme here is just consistency is really important. So if we look at a similar deal, right, we've got our Azure lines here. We choose as an MSP rather than have every single compute line type or resource group as its own SKU. Consistency and simplification meant let's bucket it into an Azure product ID. However, if we wanted to share that information with the customer, and Nikolai, this could be something that's worthwhile considering, right? So we've taken the proposed 25% margin we make on the cost. So we've compressed 50 lines or 50,000 lines, whatever it is, into one. The cost is there. We make 25% margin. We propose the sell price to be this, which is just the systems figured all that out. But then just optionally, right? Rather than have an individual product ID for every one of these things, we can actually then just push this into the invoice description. So, Nicola, there may be an opportunity there even for VoIP. Anything consumption basis works well is fewer lines in ConnectWise rolled up into a revenue line and your cost, of course, and then choosing to then dynamically pull in and roll up what you want to then display rather than break everything apart. That means fewer products, simplification. It may be worthwhile. It may be something that could also work from in your specific scenario there, Nicola, as well. So they're two parts, very costly, if not, and often super complex as well. Two more things. So one is around we bill user-based, and we want to then have a definition of a source of truth. And normally it is Microsoft in some capacity, right? So this is a read from Partner Center, whereby we can then go, okay, we've got 12 people assigned to this business premium for this client. However, at this time, there's only 11 actually assigned, and here are those 11 people. So we're only going to bill for 11 in Kathy's managed bundle capacity there, because our definition is X. That definition that you decide. Go and ask everyone in like different departments in the team, hey, what's a user to you? And just see what they come back with, what you hope to hear. Or once they don't say something consistent, you then go and define that as a team, as a company, and then roll forward with it. But also with Microsoft, the ability to quickly see expirations coming. Maybe we don't care too much about the monthly stuff unless it's an annual commit. So I want to see what's coming, what's on the horizon. Okay, cool. We haven't got anything we really need to talk about right now until later this year. We're good. But maybe a month out, you start preparing everything from an NCE renewal perspective. So like what we've just looked there is really try to help solve the revenue leakage stuff coming from a vendor invoice from Microsoft, line everything up for counts, for costs, for new sell prices, of course. User-based billing or counts or renewals around Microsoft, many, many, many moving parts. This module is called NC Easy simply because when we started Cloud Olive, NCE was starting to get rolled out and everything we read was like, oh man, that thing is not going to be easy for anyone. Let's buy that domain, nceasy.com, and we'll figure out something to do in the grand arc of time. The last piece here is really difficult to see, really difficult to see. When was this line item actually last reconciled at the vendor side? Right. So one of the pieces is easier to see for admin billing teams is having a line item, match it up. But what about the other way around? So if we were to search for all of my Microsoft related things, because we've got a convention here that's clean and concise, any gap here generally indicates, or anything not in May really, because we've started the May reconciliation, anything here now that's blank, like the chances, and you go, oh, do you know what? This is a yearly, fine. We're going to see that again in a couple of months' time. That's fine. But anything else that's a monthly generally just dictates that maybe we're billing something that we're no longer procuring, or even worse, if it's a security product, you might your customer might be buying something that you think is provision, they think is provision, but it is not. Right. So they're the key parts around Microsoft that we try to simplify down. And also amazed that it's now on the hour. So want to make sure we get through the last little bit. Very quickly, if you're interested in learning more about Cloud Olive, I'm happy to run your trickiest supplier, whatever that is, through the system for full access to it. Just get that thing under control and have real confidence with it. It might be Microsoft with, I think the July price increase is coming around. Bring the data in, see what we can do to help, and all the dashboards, all the analytics, all the groupings, all the smarts, you'll then be able to just see your MSP in a really nice, in a different angle, in a different light. Likewise, the service naming convention information is something where we really try to help elevate during any calls and conversations during implementation as well. And for yourself, Kathy?
Very quickly, if you would like to have a ConnectWise assessment, we will do those for free. We just have to set it up in your system, have a look, and then we'll do a debrief. I know we're over time, so I don't want to go into too much detail, but that just gives us a chance to look at your entire system and give you some advice on where things sit and how we might be able to help streamline and make you more efficient.
Perfect. Well, everyone, it's 2 minutes past 3 a.m. here in Australia, so I'm going to try and go back to bed. But appreciate everyone taking the time out to chat with us. Lots of really good questions. Kathy Brandi-Ann, that was very enjoyable. Thanks for doing that with us.
Thanks for hosting.
Thanks for joining, everyone.
2 o'clock in the morning.
All good.
Awesome.
Appreciate it.
All right.
Thanks, guys.
See you, team. Thanks, everyone.
Bye-bye.
Bye, everyone.